What's going on, guys? CryptoVatsik here with another TA video for you today, and as always, nothing of what you're about to see is considered financial advice, and they're just my opinions. If you enjoy this content, I'd really appreciate it if you smash that like button, and don't forget to subscribe. Let's jump right into it. Okay guys, today's going to be an update video on Fantom, and we're on the daily here currently, and it's been about 2 months since my last video on it. And in that prior video, I essentially covered this move that we've now got. So I'll just drag a snippet here to show you if you did miss that video. Ultimately, I said we had this parabolic move coming up into resistance. I said there's two scenarios basically. If we deviate above 65-cent resistance, I expected us to fail somewhere inside of red. However, my expectation was that we would stop out somewhere around at that 65-cent level. And then I would be waiting for that market structure break, bearish retest to short back down towards green. So let's go back to the current chart now. Okay, so you'll notice that's precisely what we got. We did in fact sweep 65 cents coming from this low that we had back here in May. We did not get that deviation inside of red. What ended up happening is we ended up getting our market structure break, which I will get into in a second. But you will notice I also covered this green buy zone in that last video. I said this 30-cent level is very key. It was a macro market structure break from this prior high that we had here in November. That in my opinion was untested, even though we had this low, sweeping it on account that we did break that high and make a new fresh high over here in January. I didn't necessarily count this as a retest of that level. Now, did I know that we were going to come down and test 30 cents literally pretty much to the pip? No, I did not know that. That's why I drew this green zone. I was looking for that ultimate sweep of liquidity and closely monitoring the reaction that we ended up getting. Of course, we ended up getting a tweezer bottom with these wicks. We swept to the level and then demand stepped back in. So just stepping back a bit and looking at this overall move again. I had mentioned that we were getting increasingly parabolic trends, that were getting increasingly vertical. Now, if you just zoom in on it a little bit, where did we get the trend break? Well, we ended up getting it right here. So we swept that 65-cent level. We got a trend break on this daily candle here on February 5th. So if you remember from that prior video, I was waiting for that trend break, which would have been our high time frame MSB. And if you were looking to short, I'd be waiting for that bearish retest after the trend has been broken of some sort of prior high on a lower time frame up here. First target was this prior range that we were trading in, which I also covered in that video. We came down, swept the range low, even deviated with some wick, had a very nice rally, pushed up into that prior high, and then essentially continued the trend. And the reason why I covered that short scenario is because at the time of the video, we were trading within this consolidation range. And I'd said if you're looking to get long, it should be a shorter term trade up to that 65-cent level. Because I mentioned that the correction was coming. I didn't know exactly when, but I knew it was coming. And so zooming out a little bit, I had said if you were accumulating up here, that you might in fact find yourself underwater for quite some time, which is exactly what happened. So it's just a good reminder not to jump into FOMO positions or positions managed by emotion. And now just jumping into the 4 hour on that consolidation that we had, which I also covered in that prior video, jumping into that range that we had back here, get rid of that. Okay, so here's that range that we were trading in at the time of the video. I had said you wanted to see the break of these highs hold, which was a breakout of the range high here. We had this beautiful ascending triangle consolidating pattern here, right above the equilibrium of this range, with a decisive breakout candle with what looks to be really just a bull flag descending channel with another following breakout. Extremely bullish price action, giving rapid opportunities to enter into a long position. Of course, it's easier said than done, but I had said basically you'd look for that retest of the range high, which would be a sweep of these prior highs, and then you'd want your stop to go at least below this major breakout candle. That right there was my invalidation. But again, a reminder is that this was a short-term trade just targeting that 65-cent level. This was not an accumulation strategy. And then again, you're looking for that market structure break on a high time frame, but you're also closely watching it on the 4 hour or even lower time frame. I like to stick to the 4 hour. I think it's a very good balance. But as we started moving up with this parabolic move, it was essentially just SR flip after SR flip. We had our first, well actually maybe over here, we had basically our first market structure break, which was our breakout off the bottom at 20 cents here. Okay, so we broke out, flipped it, retest. We had our next area of resistance, flipped again into support right at this zone. We made a new high, new area of resistance, again flipped into support, and so on, and so on, and on, and on, and on. So it's just level to level, trading the current range, trading the breakouts, not fading the trend, and looking at your high time frame resistance as a potential reversal. And where it gets tricky is looking for the market structure break for the actual reversal. So you'll notice on the 4 hour time frame here, we had market structure breaks on the way up. We technically had an MSB right here, which made a lower low in comparison to this low. The difference with this one, in hindsight, is the fact that we had a candle close above the level with only a wick below. And we in fact had a really nice buyback and consolidation underneath that resistance level, or this downward sloping resistance trend, followed by a breakout. So this is different price action than what we got up here, where that was our actual trend reversal. And the reason being, we've got essentially a longer term trend right here. And by longer term, I just mean respected over a longer period of time with many taps from these lows. But like I said, we were getting more and more parabolic trends. So wherever you take your trend from is where you have to stick to your rule. So we got our first signal here on a break of this minor trend. I don't know if you could call it a trend. We only have 2 touches here, but it's your first sign of weakness. Your other sign of weakness is all these liquidity traps with these wicks, 1, 2, 3, 4 wicks to the upside at that 65-cent high time frame resistance level that we marked out. Now your next signal is this bearish engulfing candle here. It's a pretty powerful candle. So if we were to see the trend continue, you want to see the bulls step in here and push back up to this level relatively quickly with some consolidation again, holding the overall trend, consolidating under that prior resistance, and then flip that level again. That would be a trigger to go long and then target somewhere higher again, maybe these highs. But in fact, we just did not get that like we got down here. Instead, we lost the trend. We consolidated under that candle close here on Sunday, February 5th. We didn't even reclaim that candle close. We consolidated, we dipped lower, and then just a bearish underside retest, a new fresh low, multiple candle closes outside the trend, showing weakness. At this point, we've broke that low, this low, and now putting this low to the test again. And your last chance to short this was right up here, which would have been a pretty nice move. So I covered this in the last video. I'd be closely watching a structure that looked exactly like this. So go back and watch it if you missed it, if you're interested. And it's not just diagonal trends. To look for that MSB, you're looking at horizontals just as much as you are diagonals. So you got to find where's that prior leg or legs low, so that when you make a fresh new lower low, you're able to invalidate the trend. Such as back here, okay? So we have our leg, we've got our legs low. We've got our next leg, we've got our leg low. We've got our next leg low, our next leg low. And so then now you're going, okay, we're up to resistance. The legs are getting shorter, the corrections are getting shorter and much shallower. So if you're looking at this next leg, you're saying to yourself, okay, is that the low then? Well, it must be. And then you got your final leg up here, second final leg up there. Here's clearly the low. And then you got even one final fifth leg here at the top from what looks to be some sort of 1, 2, 3, 4, 5 blow off the top into high time frame resistance. And then boom, we broke this low. First MSB on 4 hour. Boom, second MSB on 4 hour. Broke that low. And quickly making bulls sweat that have their stop loss below that low. Another thing that I covered, and I'll finish on this point and then move on to current price action, is relative strength index. We had our high, we had a high, and another high. The market price at the time of my prior video was somewhere in here. So we did not see anything to the right of that black line essentially. But I had said we had a high to a higher high, and we had a high in RSI to a lower high in RSI. So I had said that if we do not breach this downward trend in RSI on a higher time frame, at least the H4 time frame, if we did not in fact break above it and continue to chop higher in overbought territory, and in conjunction with that making a new high in price, which is exactly what we did, then I'm watching for that breakdown in strength. So just another sign of relative weakness in price. Okay, I think that's enough recap from the prior video and hopefully a little bit of an educational bit. Let's get into the exciting stuff because I think we're starting to get some pretty exciting price action now. Okay, so like I said, that 30-cent key level, we swept the liquidity. There's still demand down there. I've covered this lots in prior videos, is that I wanted to see our accumulation and reaccumulation phase. And the more I look at this, the more I start to think that we're starting in a reaccumulation phase. So I wanted to see, like I said, that macro correction down to green, which we've got. And I wanted to see the reaction off of green, which so far is positive if you're bullish. The next thing I wanted to see was a reclaim of the exponential moving averages. So we got our sweep of green, we got our reclaim of the EMAs. We have reclaimed our prior macro high over here at just over 40 cents. We're going to make that bold and solid. So two pretty key things that I wanted to see. Now the next thing that I'm going to point out, which I covered briefly, even on the H4 time frame, since price is fractal, you'll see the same thing on higher time frames. as you do on the 4-hour. And so if you remember, I said I wanted to see pressure put on resistance. So clearly we've got some sort of resistance trend here with our support down here at just over 41 cents, our macro correction and sweep of 30 cents. But now look at all the pressure that is being put on this diagonal. We have 2 wicks up here, 3, 4, 5, 6. 6 wicks just in this consolidation area here, with 2 more wicks on these 2 candles right there. And I can let the current price action speak for itself. But again, staying objective here and not getting too bullish too quick. Of course, bulls want to see a breakout, retest, and up. Sure. And that's fine. You'd be targeting these highs on the way up to that macro resistance again at 65 cents. So this is pretty critical right now. It doesn't mean just ape into a long position. My high time frame invalidation sits right here at just over 40 cents. Why is that? Well, it's because we've got this high time frame leg, and that's the correction, that's the low of that leg, in my opinion. So I don't want to see it breached. If we were to get another chance to get in lower, but I'd be looking in this liquidity zone down here as a really good opportunity to get good R&R, but we may just have swept it already with this low. So break it down, 4-hour, zoom in a bit and take a look. Okay, this might move quicker than anticipated, but I'm looking at this flipped high here as a potential long zone. It was prior resistance not long ago. We had consolidation underneath it before what looks to be a breakout now in this current candle. We're sweeping into technical resistance. So I think any dip into essentially this zone above that prior high is a buy and looking for a quick reaction to break out of that trend. My stop loss would really either just be going below the candle low or below one of these lows over here, whatever your risk parameters allow you to trade with. Be careful of deviations above here and buying the breakout up at this level, because if you just look left, you'll notice exactly what could happen again, and then we might end up coming down to consolidate further within underneath that overall high time frame trend, and then we in fact potentially break out later. So that's how I'd be trading it at the moment, zooming into the 4-hour, looking for the setup, monitoring how price is reacting to this resistance zone or this resistance trend, making sure that this candle doesn't just turn into a wick like the others that we've had. Because otherwise scenario 2 is, like I said, just looking back in this liquidity zone down here in green. And if we do end up getting something like that, then my invalidation goes back to that high time frame level just over 40 cents from this low over here. Okay, now let's look upwards at some targets. Switch back to the weekly. Okay, so targets still got high time frame resistance in red. We've also clearly got resistance here, like I said, at that 65 cent level that we had swept with this parabolic move. And we've also got the 100 EMA sitting right here as well, which does concern me a little bit. My concern with that is if we do push up, we sweep this high, we come up to the 100 EMA, and we get another wick up to that 65 cent level for an ultimate failed breakout, and we ended up coming back down to these lows. So you got to pick the timing of your trade and your target, whether you're going to sell at some of the highs on the way up or at the ultimate high or at 65 cents, or if you're targeting in this red zone as high time frame resistance. Because what we start doing is if we reject off the 100 EMA and we do in fact do something like this, you'll remember from my videos, it starts looking like that reaccumulation range, which is fine because then it's more likely that we power up to break high time frame resistance. But you don't want to enter a trade here and watch it fully lap yourself and end up even not taking profits on the way up. But all in all, I will admit price looks bullish. It looks primed for a breakout to the upside. I think if we are getting a next leg up, that we'll see green across the altcoin market, and there's going to be lots of setups and opportunities over the coming few weeks and months. So look for those setups, drill into lower time frames, have your invalidations, and try to trade as objectively as possible. Thank you so much for joining. If you enjoyed it, please give the video a like, and if you're new, don't forget to subscribe. Let me know what you think in the comments, and we'll see you next time. Peace.